Hey everyone, let's talk about what's going on with Google's stock. Or more accurately, Alphabet Inc. That is NASDAQ Q, GOOGL. Because the past week has been anything but smooth sailing. On Friday, Alphabet's stock plunged nearly 4%, closing the day at $166.64. Now, that might not sound shocking by itself, but in the context of recent developments, it's definitely raising eyebrows. What's driving this sharp sell-off? The primary trigger seems to be a growing storm of regulatory and competitive threats. Over in Europe, Alphabet is feeling the heat from the EU's antitrust watchdogs. Regulators are scrutinizing whether Google has been unfairly promoting its own services, like Google Shopping and Google Flights, over competitors in its search results. This is all part of the broader enforcement of the Digital Markets Act, that is DMA, which is designed to foster fair competition in the tech space. To avoid hefty penalties, Google has proposed changing how it displays search results. Their plan involves giving third-party services equal visibility with a standardized design, but critics aren't convinced. Some say these changes still tilt the scales in Google's favor, and the European Commission isn't ready to let this slide just yet. There's even a hearing scheduled for July 8th, which could play a big role in shaping Google's future in the EU. But that's not all. Across the Atlantic, there's another blow. Apple has hinted it might remove Google Search as the default option in its Safari browser, potentially replacing it with an AI-powered alternative. This would be a massive hit, given how much of Google's revenue is tied to search advertising. Combine that with an intensifying antitrust investigation by the U.S. Department of Justice into Google's advertising dominance, and you've got a cocktail of uncertainty that investors are clearly not loving. To put things in perspective, Alphabet's shares have dropped 10% this June alone, wiping out over $200 billion in market value. That's a steep fall for one of tech's most reliable giants. While the long-term outlook for Alphabet might still be strong, after all, it has a rock-solid business model and dominates online advertising, the short-term turbulence is real. Investors are jittery, and rightfully so, because when big tech companies start losing their regulatory edge, the consequences can be far-reaching. So what's next? Everyone's watching the July 8th EU hearing and looking out for any moves Apple makes regarding its default search engine. Until then, don't be surprised if Google's stock keeps bouncing around as markets digest the implications. It's a fascinating time to be watching big tech, and it's a reminder that even the giants aren't immune to pressure. Stay subscribed for more videos.